All right, let's cut right through the noise on Palantir's latest earnings. I'm a Wall Street analyst, and my job is to focus on what actually matters. Forget the hype. I'm going to give you the three numbers that define this entire quarter and tell you everything you need to know. Let's get right into it.
First up, 114%. This is Palantir's Rule of 40 score. Now, for elite software companies, anything over 40% is considered strong. 114? Well, that's just in another league entirely.
Second number, 121%. This is the year-over-year growth of their U.S. commercial business. And let me tell you, this is the absolute engine of the entire company right now. And finally, a massive 342%. This isn't just a big number. It's the growth in the total value of new contracts they signed in that same commercial segment. It's basically a crystal ball showing massive future revenue. These three numbers, they tell the story of one of the strongest quarters I have ever seen. Okay, so let's dive into the details here. To say Palantir beat expectations, well, that's an understatement. They didn't just beat them, they completely blew them out of the water. The results were frankly explosive. I mean, just look at this. They outperformed on every single key metric. Revenue came in at $1.18 billion, absolutely crushing estimates. Their official earnings per share also beat. But the real story, the sign of incredible health, is that revenue growth accelerated to 63%, and they booked a record $2.8 billion in new deals. This was a truly monumental quarter. So what's behind these incredible results? Where is all this coming from? It boils down to one thing: the absolute explosion in their U.S. commercial business. This segment has gone from a promising side project to the company's hyper-growth engine, and frankly, the numbers are almost hard to believe. I mean, just look at this chart. The picture says it all. Revenue from their American corporate clients more than doubled, jumping from $179 million to nearly $400 million. That's 121% growth in a single year. This is the clearest signal you can get that their AI platform, AIP, is exactly what the biggest companies want right now. And if you think that revenue number is wild, the indicators underneath the surface are even more impressive. New contract value grew an incredible 342%. Their backlog of future work nearly tripled. And on top of all that, they're adding customers like crazy, and the deals are getting bigger and bigger. Deals over $5 million, they quintupled. These aren't just trial runs anymore. This quote from the chief revenue officer on the earnings call just tells the whole story. It really shows you how this is all happening. Customers are starting small, and then just 5 months later, they're expanding their contracts by 8 times. This land and expand model isn't just working, it's firing on all cylinders. Okay, so we've got explosive growth. That's fantastic. But any company can grow by just burning through cash, right? The real question for sophisticated investors is, are they making money while they do it? That's where a key benchmark called the Rule of 40 comes into play. For anyone who doesn't know, the Rule of 40 is a super simple but really powerful idea. You just take the company's revenue growth rate and add its profit margin. If that number is over 40, you've got a healthy, top-tier software company on your hands. So, what's Palantir's score? Well, you take that 63% revenue growth we just talked about, and you add in a massive 51% adjusted operating margin. You put those together, and you get 114%. Yeah, 114. This slide really puts that number into perspective. See, clearing the bar is 40. A great software company might hit 60, maybe 70 on a good day. A score of 114 isn't just clearing the bar. It's like they're playing a completely different sport. This is a rare, powerful combination of hypergrowth and fortress-like profitability. You just don't see this. Of course, Wall Street is always looking ahead. A great quarter is nice, but a strong outlook for the future is what really moves a stock. And on that front, Palantir's management came out with a very, very confident message. They didn't just bump up their guidance for the year. They raised it significantly across the board. Just take a look at these numbers. They're now telling the market to expect U.S. commercial revenue to grow over 104% for the full year. That's a huge statement. They also boosted their targets for total revenue, income, and cash flow. This is management showing extreme conviction that this momentum is here to stay. So, let's boil all this down. We've thrown a lot of numbers at you. What are the key things you really need to walk away with from this incredible earnings report? It really comes down to these three pillars. Number one, the U.S. commercial business is an explosive, undeniable growth engine. Number two, the company is operating at an elite level of profitability, proven by that insane Rule of 40 score. And number three, management is incredibly confident in the future, and they're putting their numbers where their mouth is. And all of that leaves us with the big, multi-billion-dollar question the market is wrestling with right now. Palantir has always been an expensive stock, priced for perfection based on its potential. But after a quarter like this, where potential has clearly turned into dominant performance, you have to ask, is that high valuation now finally justified? That is the question every single investor is trying to answer today.